Now, most dividend growth investors out there, including myself, are huge fans of the Schwab US Dividend Equity ETF, or SCHD, and this is because this ETF has grown over time, paid us dividends, and paid us more and more in dividends, which has made investors a lot of money over time from this one. But even though SCHD is sort of known as the king or the queen of dividend growth, there is another, maybe less talked about, super high quality dividend growth style ETF. We're talking about the Fidelity High Dividend ETF, or FDVV, that has had similar performance to SCHD and even better in some ways. So in this video, I'm going to make it very simple. We're going to break down what SCHD has to offer and also look into FDVV and try to figure out which of these two dividend focused ETFs are better off for investors and which ETF has even performed better long term. So I promise you, if you're a dividend income focused investor, you're definitely going to want to stick around until the end. So drop a like down below, subscribe, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first things first, we have to go over the objective of SCHD. Just to lay some ground rules, the objective for SCHD is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index, which is an index composed of around 100 different dividend paying stocks, which all have a history of paying dividends and growing dividends over time. Now, SCHD is super popular, like I said, because it offers dividend growth, at least historically, and gives you exposure to 100 different stocks that historically have done pretty well and all made it through multiple different screenings to even make it within the underlying index. Now, this ETF also is very cheap to hold on to, which is a 0.06% expense ratio, and it offers somewhere around a 3.3 to 3.5% starting dividend yield, which is massive, especially because this ETF offers a lot of growth potential, in my opinion. Now, FDVV, on the other hand, the objective is pretty simple also. It says provide investment results that correspond before fees and expenses generally to the performance of the Fidelity High Dividend Index. Normally invest at least 80% of its assets in securities included in the Fidelity High Dividend Index and in depository receipts representing securities included in the index. It may lend securities to earn income on the fund. The index description says the Fidelity High Dividend Index is designed to reflect the performance of stocks of the large and mid-capitalization dividend-paying companies that are expected to continue to pay and grow their dividends over time. So again, sounds sort of similar to what you're getting exposure to when it comes to SCHD, but trust me, there are a lot of differences when it comes to these two ETFs, which we're going to get into. Now, the total holdings for FDVV are 107 holdings, which again, very similar to that of SCHD. But this is where things get interesting when it comes to both these funds. On the max time frame, SCHD has been trading since around 2011, and the ETF is up around 241%, and this is not including dividends, just ETF price return, which is insane. Now, FDVV has only been trading since 2016, but still is up around 107+%, which is also very impressive. Now, the holdings is where these two ETFs are really going to differ. And this is what I always tell, especially newer investors. If you want to invest into an ETF, whether it's one of these or whether it's any ETF out there, you need to realize that you are getting exposure to multiple different things within the ETF. Multiple different stocks, sometimes even options. You need to really look into what the top 10 holdings are, along with the rest of the holdings in any ETF, and ask yourself, do I want exposure to these? Or maybe there's a better ETF out there for you. But here's the main difference. With FDVV, you're getting around 25% exposure to technology. Now, this is where SCHD sometimes falls behind because you're only getting around a 10 or 11% exposure to technology with SCHD, which again might be something you want, maybe something you don't want. But for especially younger investors that have a long time frame ahead of them, technology, at least historically, has done very good and has grown a lot. So some investors out there want ETFs that have a lot more exposure to tech. Now, the rest of the breakdown for FDVV is industrials is around 15%, consumer defensive is around 11 or 12, utilities is around 10, energy is around 10, and then a smaller portion of things like real estate, financials, healthcare, consumer cyclical, and communication. Now, another thing to notice about FDVV, you are getting around 9% exposure to real estate, where in SCHD, you are not getting any exposure to real estate. Once again, something that maybe some investors care about, maybe some investors do not want real estate. I personally don't really want real estate exposure in an ETF, and this is simply because I already have around 3,000 shares of realty income. But for investors out there that do want some exposure to real estate, because let's be real here, a lot of us do love real estate, and real estate does offer normally a much higher yield. Then FDVV might be an ETF to look into because it offers exposure to real estate along with much more exposure to technology. Now, the top 10 holdings for both these ETFs, this is again where things are very different. The top 10 names in FDVV are names like Nvidia, makes up over 6% of the ETF. I mean, that right there alone is going to offer investors potentially a lot of growth exposure, but also maybe some more downside because some of these names are much higher beta than names like we'd find in SCHD. So there's a ton of Nvidia, Apple, Microsoft. I mean, the three top names in FDVV, let's be real here, those top 3 names are very beautiful. Then we have names like Broadcom, Philip Morris, we have names like Targa, ExxonMobil, Procter & Gamble, Altria, Nextera. Now the names within FDVV are sort of a mix mash of a little bit of everything, which I honestly kind of like. I like the fact that there's some tech in here. There's also some boring dividend payers in here like Altria Group. I personally like the idea of having a mix of everything, and honestly throughout my long-term portfolio, that's exactly how I built it. Now, SCHD's top names are names like BlackRock. We have names like Cisco, Bristol Myers, Home Depot, Chevron, abbvie, Verizon, Texas Instrument, Pfizer, UPS, etc. Now, these names are sort of tried and true names, and I don't know what's going to happen in the future, but I don't think these names are necessarily going to grow as fast as some of the names that could potentially grow in here. Now, that being said, these names did make it through multiple different screenings to make it within the underlying index that SCHD tracks. So they obviously have done something right over time, otherwise they would not be in these top 10 holdings to begin with. Next up, to compare the dividends for SCHD versus FDVV, because let's be real here, a lot of us are buying into either one of these ETFs because we're interested in earning dividend income over time. Now, SCHD, like I mentioned earlier, offers around a 3.4% trailing 12-month dividend yield, but SCHD historically has offered massive dividend growth, around 11% over the max time frame. Now, this means that over time, investors like myself have been getting paid larger and larger dividends from SCHD for every single share that we own. Now, this is one of the appealing things about this ETF, at least for me personally. I currently have around 2,200 shares of SCHD, and I'm hoping that over the next 10-20 years, I'm going to be getting paid massive payouts compared to what I'm getting paid today. Now, FDVV, on the other hand, has a 2.73% trailing 12-month dividend yield, which again is not bad whatsoever, again because you are getting so much exposure to massive growth because of some of the names within the holdings. Now, the dividend growth for FDVV is sort of all over the place. There's been times where the dividends have grown, like if we're looking from 2020 to 2023, but as of recent, the dividends have actually been getting smaller. Now, again, even though the Fidelity High Dividend ETF does have dividend in its name, I do think that this ETF offers a lot more to investors than just dividends. I mean, the ETF is up over 33% on the one-year time frame. But if dividends are very important to you, and if you're trying to build out a long-term life that's going to be based off of dividends and cash flow, then SCHD might be a better ETF to look into there. So now that we went over SCHD, explained how this ETF works along with the way that FDVV works, and explained some of the pros and cons of each of these ETFs if we were to stack them up next to each other, I think there's only one last thing to do, and this is to compare SCHD and FDVV head to head, look at their total return over multiple different time frames, and try to figure out which of these ETFs is truly quote unquote better. So if we were to use total return as the metric, this is dividends plus price return included. On the year-to-date time frame, FDVV is up 25.2%, where SCHD is up around 17.3%. Not bad whatsoever either way, but FDVV did win this one. Now in the one-year time frame, SCHD is just shy of 30%, where FDVV is up over 37%. Once again, both these ETFs offer a massive total return, at least over this time frame, but still FDVV did win. Now, when the 3-year gets a little bit crazier, FDVV almost doubles SCHD's total return with 44+%, where SCHD has almost 23%. Now, in the max time frame, it's sort of hard to compare the two because they haven't been trading during the same time frame. FDVV started trading in September of 2016, but on the max time frame so far, total return being the metric, SCHD has grown around 410%, where FDVV has grown around 177%. So even though SCHD does offer a larger starting yield and much more dividend growth historically, FDVV over almost every single time frame crushes SCHD in its tracks. Now this of course does not mean that SCHD is not a good investment or maybe not the right investment for some investors out there, but as far as a total return basis, at least over multiple different time frames, FDVV is the winner. Now lastly, maybe you guys are curious on whether or not I personally am buying this ETF for my long-term portfolio, what I think of it. The answer is yes, absolutely. I do own some shares of FDVV, and although I'm still in the midst of building up my long-term SCHD position, this ETF is definitely on my radar and I'm a huge fan of it because of all the reasons we talked about in this video. But with all that being said, SCHD is still my overall favorite ETF as of right now as far as dividends go, for reasons that I've talked about probably 100 million times throughout my videos. But before I go, I want to hear from you guys down below. When it comes to SCHD or ticker symbol FDVV, which is your favorite out of these two? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.